It's your boy Mario Trades, and I'm here. I'm back. We back, man, making content. So I just want to show y'all something in the chat. And I'm back running my chat, back getting everything active. As you can see, I gave out this analysis, right? We, I'm gonna explain this later. Well, some of it later, because most of it is for the premium side and free side. You can join my chat down below for free, or you can join the premium side to where you get the recorded classes, live trading sessions, live commentary. Code is welcome 50 for 50% off. So you do not have to pay the full price for your first month, right? As you can see, I gave out this analysis and what happened after. Boom. We can see the difference between the two. Obviously, I caught out the bottom of this little V shape upwards to the back to all-time highs or near that area, and yeah. But yeah, so you can use the code to join, and I'm gonna break down what I saw and what I wanted to see and the why behind that, right? So as we can see, if we go on the daily time frame, we have this area right here. I would like to call this accumulation, right? Accumulation to me personally is when the market is moving sideways and it has no direction on where it's going. So we have accumulation, right? After accumulation, first let's identify this first, right? So this how people that trade support resistance get their trades. They're trading a ranged market back and forth like a ping pong game. But that's not a way you want to be trading, right? You want to catch the moves from down to up and down, and so forth. Catch the reverses instead of trying to catch these low quality trading conditions like this right here, right? So we leave this alone. This is called accumulation. And once again, accumulation is when the market is not moving in a directional way, right? It's just moving back and forth like a ping pong, just like this. Right? After accumulation, then comes manipulation. What is manipulation? It's like one big liquidity sweep. And there is a way you can measure on how far we're going to manipulate down or manipulate up. But that's that's for the premium chat. And once again, if you want to join, we do have 50% off code welcome50 WELCOME 50, all capitals, and you'll be let in we're not Reaper Academy no more. We are now called Victory Alliance. Shout out my boy Chris. He turned over a new professional brand leaf brand, and we're gonna continue to do what we're doing, right? So we got accumulation. After our accumulation comes our manipulation. So this whole move down right here, right? A lot of people will still bearish, but this is only our manipulation down. It's like a fake out, right? And when you get in on a fake out, you obviously are not on the right side. You got people who thought right here was the low, right? They thought this area right here was going to be the low. No, this is simply a retracement, a lower high to come in and make a new low, right? So this was just a retracement. This is not the true low being put in. We obviously have more manipulation to the downside, but this whole move right here is the manipulation move, right? So obviously go with the manipulation. Trade it in, you can trade it into the V before it come back up, but this is all just manipulation, right? We had to bottom out somehow. This is a nice correction that we had, right? So after manipulation, which is right here, we then displaced to the upside and continued in the opposite direction. So this is called our D for distribution. Probably butchered the word, but this is distribution, right? So distribution is going to be the opposite of manipulation. You will never have us manipulate and then distribute in a way that we manipulate it unless it's just a bad day. Usually when we have accumulation, manipulation, distribution, these three stages, you then have a reversal after that manipulation, and then we end up trending out like we did on here. As you can see, we end up trending out to the upside here. And we end up distributing back up to the upside to take out this buy side liquidity, right? And I'm going to show y'all just a quick example on how you could have caught A swing, even trading one micro swinging, it would have been over 1,000, 2,000, 3,000 ticks, right? Do the math. A micro is $2.50 per tick. You do $3,000, swing one micro, caught the whole meat of the move. That would have been an easy $6,000 off of one micro, right? And once again, we are in here giving out the signals. We're doing the calls. We're in here talking. Obviously, you can join. Obviously you can join the free chat, which is up here. We do a lot of calls. Victory Alliance. These are all voice calls that we did. We do have a weekly Q&A coming up, right? And yeah, I'm just trying to get my chat back active. I'm back locked in, helping other people learn how to read the market. We got Chris in here that send news and give out analysis and more technical things. And then we got Davion send analysis in here, give out certain levels and stuff like that. Real accurate stuff, right? So go back to the chart. So let's say you doing your breakdown analysis, right? If I'm looking at this, I'm looking at this volume imbalance right here, right? Right here, you got a big volume imbalance. Now you're not going to enter just because we came inside of this volume imbalance on a higher time frame, right? I like to, size into whatever is in this area and get a more precise entry in the lower time frame because you would never enter on a higher time frame. That's just it's not going basically just not going to happen. So we're gonna go down to the hourly time frame. So we look down on the hourly, same thing. We can see that we still have the volume imbalance in the same area, right? So as we see a market structure shift, right, coming out of here, right? As we see that, we see a fair value gap being made. So what I do, come in and draw this fair value gap. Mind you, this is all hindsight, I understand, but I guarantee you, y'all seen before it happened, I said that was the bottom, and it happened. So even though it's hindsight, I still predicted it before it happened. So you'll come down to this hourly gap right here. As you can see, price came down, right, into the fair value gap, but you still wouldn't enter on the fair value gap. You're going to refine this gap to an even lower time frame, right? 15-minute. You did look in here, as you can see. Boom. If you look right here, you have your fair value gap, and you have a breaker. So the fair value gap, we came to the 50% or the consequential encroachment of the fair value gap, and we also have a breaker block. What is a breaker block? A breaker block is the last up close candle before we take out a low, right? So this was our low that was put in, right here. Price then came back, took out this low, and as you can see, this was the last up close candle before taking out that low and then breaking above, right? We came back into the fair value gap and touched the top of the breaker. That could have been your entry off the 15-minute, and you could have held literally off of that little entry. Now, let me see. Hold on. Let's see. This one here. Dang, where did my drawing go? That's why I hate using TradingView. Okay, so mind you, we can zoom in. So let's say you get in your trade, you get in your entry, you got your points as your PD rates to go off of and stuff like that. All you have to do is target the buy side liquidity, right? So if you look, we zoom out, right? You just mark out the major swing high and lows for your take profit points. So we got this one, buy side liquidity, and obviously buy side liquidity. So yeah, it's like, okay, boom, we got the highs marked out, we got where we want price to run to, right? Right, but how do I know how to hold, how to manage, how to get the meat out of my trade? So you got your entry point, and let's say you entered off of that. Let's be realistic. Nobody's having that type of stop loss. So let's say you got in, right? Boom, you got in. Your trade is in profit, right? So what I like to do is I like to mark up the PD arrays that's needed to be invalidated for this trade to work out for me. So for example, this bearish 15-minute gap would have to be invalidated for me to continue to stay in this trade. But even before that, we have a 15-minute gap right here that we could have made us go break even. After we went break even and we finally broke above this inversion, your stop loss comes, me personally, your stop loss can either be right here, or your stop loss can be moved under the PD array, right? Which never got broken, by the way. So you still would have been in this trade. So me personally, I like to go on the 1500 hourly because that's the time frame alignment. So then after that, you start marking up the fair value gaps and stuff, right? After they're made. So this was a new gap that was made right here. Stop loss is under this PD array. You let it hold, you let it run, and as you can see, you're fine. As long as you're holding accordingly, you're not just trailing for no reason. You're trailing because it's new PD arrays being made, it's different things being made, and you have an actual reason on why you're holding. You're going to be fine. You can target the higher time frame buy side, sell side liquidity. As you can see, it was all taken out, literally. All of it was on stretch, or you can go on a 4 hour if you're swinging. 4 hour buy side liquidity, high right here, high right here, high right here, and you would have been fine. But this is just a little market analysis and entry analysis and managing your trades. I'm slowly but surely getting back to making these videos, so I hope y'all do enjoy it. But I'll see y'all tomorrow. I'm back posting consistently, and I will catch y'all in the next video. Peace.